Hi everybody, it's Tim Reazor with Revere Asset Management just before 3:30 here on a Wednesday night. So very quickly, stock nerds, market lovers, before you and I begin, listen to tonight's video. I want to talk about some ways to avoid anger and anxiety in the stock market. We'll show you the indices. If they hit this level, I think they are going to flush, but we'll take a look at how to avoid trading like you think the world is going to end. I want to show you a group that is clearly broken down, should, I think, be avoided. This group is not an opportunity, in my opinion, by no means advice, of course. What a stock looks like before it's about to potentially break out. Got a really nice bullish setup I want to bring to you, and then we'll look at some earnings thoughts. But real quickly, the podcast page. If you go to the podcast page, video podcast is up. Your favorite podcasting software has it on Google or Apple. Look, best owned in the world, no debate there. What I bring to the table there is spot on. But interesting that we talked about Robinhood. I talked about it in I believe in a good way. Constructive manner, excuse me, is what I wanted to say there. And I'm curious if any stock nerds took advantage of what happened the last couple of days in Robinhood. It's super interesting moves, right? And so we'll take a look at that and a couple other stocks that are dopamine highs and maybe the setups to get them before they do that. We'll take a look at that with you. But before we begin, if you have any questions, concerns, comments, to take umbrage with anything that I'm saying, all you have to do, of course, is always reach out to me to revereasset.com. Any questions for the portfolio team? Oh, there's Merrill. She is awesome. If you dial 855-732-5932, you're going to get either America's Fiduciary right here or Merrill. And Merrill is awesome. She's the ops manager, but she does so much more than just that. And if you want to talk to the portfolio management team, either picking stocks, other trading stocks, what they're buying, what they're selling, everything, how they screen, what makes their criteria for screening, buying, and selling, all you do is email Hunter, Alex, or Don at revereasset.com, or just the easiest thing to do is call 855-732-5932. Want to get a hold of me? You can email me, you can call, send your questions that way. I like Twitter, man. Twitter is brevity for me. I get people all day, most every day, and the weekends too. We're texting buddies, right? This is how I've opened up the text. I used to give people my phone number. That got a little arduous for me. So Tim at revereasset.com is how you do it, and then all you do is find me at TJ Reazor on Twitter. Excuse me, find me, excuse me, I didn't mean to say timrevereasset.com. You can do that if you want, but at TJ Reazor on Twitter, my DMs are open. You can just message me, and it's super easy. It's like we're texting buddies, and I like Twitter because it's brevity to me. Twitter makes my life easier. So real quick, let's do some earnings reactions here tonight. So Roku, man, Roku is just getting slapped around here. Interesting to see what's happening with old Roku. Is my mouse, I think my mouse, either the battery just died, like the rechargeable battery, or it is not tracking. Let me see if I can get it to track real quick. I'm not sure if it's going to track, but we're okay without it. So here's Roku, and it looks like it's down well over $30 here. So goes out at 420. What was the expected move? Yeah, expected move was 36. So a little beyond the expected move here. And so that's interesting because Roku was weak before earnings for several sessions here. And so super interesting to see that move in Roku. So look at some others here. What else reported tonight? I think Etsy, ETSY. Ooh, they're selling Etsy off here. You know, and they sold pins off too, which was kind of the COVID stock. And look at this, Etsy. What was the Etsy expected move? We should take a gander at that, right? ETSY. Etsy was $20, so down way more than 20. Well, I should say way more, but you're down definitely more than 20. Now, I think Uber is the last one. Maybe I'll probably miss number two. Ooh, 38.90. So what was the expected move with Uber or UBER? 3, kind of right in there. Yeah, that interesting move in Roku and Uber. We'll see how that translates to markets tomorrow. But look, there's a way to avoid, I think, having anxiety, waiting for the world to fall apart. I mean, there's a lot. I mean, there's so much news right now, especially with the Delta variant. And I don't need to rehash what the news is, but there's a lot of reasons that you can be negative, right, on markets and stocks. And this market has had some real stalwart type stocks. Like, has anyone watched Chipotle after earnings? I mean, that's they can't get enough of it. And Chipotle's float, by the way, is only 29 million shares. Like small float. Like I think small float's where to go. Like I've been talking about this on the podcast. Stocks. What's Restoration Hardware doing here? kind of meandering after earnings. 25 million float. Small float, man, is where it's at. When you talk about the billions of shares, hundreds of millions of shares, Apple, and let's take a look at it real quick. So here is Apple's float, right? Like biggest stock in the world. Like this number just goes, there you go. That's a big honking number, right? And then how about MSFT? Right, that's a big honking number. And then you're like Restoration Hardware, 21 million. CMG, oops, CMG. There you go. And then like, think about these. These are two really well-run companies, Chipotle and Restoration Hardware. And then look at this FXLV, F45, right? Came public with, 90 million shares. 90 million. Do you know how much energy it's going to take to get that thing to move? But then you're like, well, Tim, what did old Hood come public with? It's a lot of shares too, isn't it? And it's moved tremendously. So look, we'll take a look at that here in a second. But if you want to avoid anger and anxiety, like we'll just leave Restoration Hardware up here. So I love just these average true range charts, and I'll tick these off to you here. So here's the mean. Here is +1. I apologize, my mouse is stopped working, and I'm drawing freehand now. So 1, 2, and that's not a bad number 3. And if you just wanted to focus, say, on the daily charts, see, I like weekly charts a ton. I think they're easier to manage, especially if you're busy at home with family, work, life, whatever you've got going on. But if you say that I'm going to buy stocks as they cross the mean, maybe you get an 821 cross, above the mean, and I'm going to trail up a stop as they approach the third ATR. There isn't anything you can do, because you can see when you get up to that third ATR range, what do? They generally give you a pullback, okay? And so here's another earnings period with old RH, gets up to the third ATR. What does it? Pulls back to where? The mean, makes its move, probably stops out here. If you trade in and around the mean, I've done classes on this. If you have questions about this, and if you're waiting for the world to fall apart at home, and it's not happening right now, by the way, and so and you want to just trade in sync with the market, email me. I'll be more than happy to send you the trade schools I've done on trading with the mean, using the average true range charts, triggers. I just sent that trigger class out the other day, which was, I'd forgotten that I did it. And somebody asked for it on Twitter and said, yeah, I'm more happy to send it to you. So like here, that RH might not be the best example. Let's do Roku, right? Roku, third ATR, pulls all the way back. Third ATR, pulls all the way back before earnings. You can do this with any stock. It did Etsy, ETSY. I haven't looked at Etsy on it. Yeah, look at Etsy. Third ATR. Yeah, so get it as it crosses the mean, run it up to the third ATR. Most people, if you're like, well, Tim, I'm a week, that's too much action for me. Okay, well, let's do weekly mean, right? So the weekly mean, you're here. That's back last year, right? October. And what do? You run it. It's still the laws of probability still work in terms of average true range. Now we're just on a weekly time frame. And look, yeah, pull back. Here's the weekly mean. You weren't involved in look at it, all this time below the weekly mean. There's the mean right there. Finally gets across, doesn't really do anything. And if you're like, I'm not holding through earnings, because earnings are a binary event, you don't know what's going to happen. And if you don't have, for me, like at least a 10% gain, there's a couple caveats, but generally a 10% gain, then you're not participating. You're just like, I'm going to let that earnings period go. So you can see here, as Etsy is down more than the $18 that market makers were expecting. Let's take a look here, though, at something that is absolutely happening that you're probably aware of, but maybe not, based on all the reopening talk that's now turned to all the COVID talk. So let's look at IYT together. So IYT broke down below the mean on the daily chart all the way back here in June, long before the Delta COVID variant stuff was taking shape. And this is why when I talk about its first price, then news, the news is caught up to IYT, and IYT once again has led the way here. But we've talked about this for weeks, stock nerds. Look here, look at when Love broke down, right? Southwest Airlines, they can't keep the planes. They've not enough planes. They're all full, right? And I get it, but the transports, the market hasn't pulled back the way the transports have. But like, look at GM. I mean, down Down 9% for that big of a stock is super interesting. Look at Ford, right? These things, even with earnings, couldn't help it. These things broke down, back in early July. And so the transports, I don't know if they're signaling something, but if you take a look at the RTY, the RTY is definitely not bullish. And so this thing is struggling here. It's probably going to get back to 2111 here, 2189. If you feel that if RTY were to break free here and break lower, you're probably going to feel that in the other indices, because you got the YMs hanging by. I want to be careful. I was going to say hanging by a thread. Look, they're hanging by a thread to the 21. That's a bullish chart, okay? But it's a quick trip to the 50, and if you take out the 50, it's a quick trip there. Does it continuously get bought? That's it's 50-50. I don't know if it does or not. But I know if it breaks below the 21, it's weak, and I probably want to be careful on the long side. But then you look at like S&Ps, right? S&Ps holding the 8, and then you look at the stalwart of the market. It's a beautiful chart of the NQs. So let's look at the S&Ps real quick. If S&Ps, excuse me as I take a drink there, if S&Ps, pardon me, were to break this hourly chart, you can see I've got this marked off here. This is super interesting to me that you're making lower highs here on that S&P chart, and you started doing it last Thursday. So you hit that high, can't quite get there, and now you're starting to do this. And who knows what's going to happen. Tomorrow is Thursday. I would think tomorrow's quiet. Friday jobs report. You take out this recent low, you're probably coming down here to 43.37. And then, going into the weekend, that won't feel good for people going into the weekend. But that would, if you were to get down to 43.37, where's that on the daily chart, right? So let's just say 43.37. So we're on a daily chart, 43, right here, about the 34. You're coming down to that 34 level of support. If you were to break that, 40, coming down to, we'll just call it 4,300, 4,290, 4,300. That's going to feel, that's 100 points, 100 quick points. It'll happen probably in 2.5, 3 days total. And to come down and lose 100 points in the S&P is going to feel awful for a bunch of people who are probably pretty long a bunch of stocks, because the Nasdaq, it won't be resilient. It'll probably come down, and it'll want to test at least down here to the 21, if not revert back a little further. But look, this is a strong market. And so what are some things that you can look at to help yourself, participate to the downside if you wanted to in some indices or certain stocks, and take advantage of bullish situations, because this is a very bifurcated market. Let's look at this real quick. Let me set it up by showing you TMX. So this is clearly bearish, right? And what you're looking at is a 10-year Treasury yield that's yielding 1.18. Now, whether we're the best store in town in terms of yield and bonds, and people are buying our bonds, which drives bond prices up and yields lower, or it's the Fed, whatever it is, it's driving rates down here. And you can see that they're just on the precipice of falling even further. But what you need to understand is they're down to these February levels, like the great reopening, right? Remember that what happened with inflation or the reflation trade. We're going to be reopened, but these started breaking down the same time as rates started breaking down, reflationary wise, the same time that transport started breaking down, which I find incredibly interesting. And so either bonds are signaling that, long ahead of the news, that this COVID, this Delta variant or whatever was coming, did they know it? Why did the reflation, why didn't yields stop going higher? It's a lot of good questions to be asked here, but let's take a look further, right? So what about housing, right? There's not enough housing, so we'll look at ITB. You could say, Tim, well, that's kind of a bullish chart. Yeah, yields are at pretty bad levels here. In terms of strength, it's great if you want to go get something, right? That uses the 10-year or the 30-year. but housing isn't back to highs. Like, let's look at DHI. Let's look at LEN. Let's look at TOL. No, LGIH. Let's look at entry-level homes. These aren't the most bullish charts in the world. They're just kind of meandering after hitting highs back in when? Yeah, back in the springtime. And so you saw what's happening now to autos. You saw what's happening to travel stocks. You see what's happening to these housing stocks. And right now, man, the Nasdaq is a show. And if the market were to lose the Nasdaq strength, that is definitely troublesome. But it's not happening yet. So instead of focusing on, and by the way, like all those people that told you to get banks, like look at what banks have done. Low interest rates, right? These are money. Well, GS isn't a money center bank. WFC is and BAC is. But I mean, look at what's happened here, right? Rates are, you know, these things that are rate dependent. They're not. Well, actually, that's not such a bad chart of Wells Fargo. BAC isn't. I don't think the gold is that. What's MS doing? Which is not. That's not so bad. But where's the move at right now? And here's the setup that I like. And so instead of trying to catch potentially a falling knife and something that may, you know, I mean, how many times can people talk forward up, right? That may not work here. I mean, down 5% today. May not work in the near term. What about something that has potential? Like, what's the setup look like? So here's the Nasdaq, right? And so strongest index, I probably want to be involved in those stocks. It keeps finding support here, gets in the zone of the 21, just levitates right back up, okay? So what looks like that? Yeah, Adobe looks like that. And so, well, what's the setup here? Like, the way I think you get into things, the way I think you should, get into things, do what you want. It's a market. You can behave how you want to. It's a market. Anything can happen, right? Let me take off this extended hours. It's this type of setup right here. And so you want to get in things before they potentially make these big moves. And how you do that is you can use a 4-hour, 195-minute type setup to get a little bit of a jump start onto the daily. And so you can use a moving average cross like a 5 through the 8 or a 5 through the 21 or 8 through a 21. That all works out good. But this right here, this is going back. So let me just tick off where we are here. Here's today, okay? There's a week ago, and there's 2 weeks ago. So this setup is over 2 weeks long now. Well, three weeks in the making, okay? So 3 Wednesdays now, we're into this setup. And things just take a while. And that's what I think a lot of folks lose is the patience of the market. It's kind of why I like weekly charts. It's just patient. You know, you're not every day. You're not making money, but as long as the trend is intact and the market's still intact, there's a good chance that you're still intact and you're not waiting there for, you know, anxious, waiting for the bigger overall macro scenario to fall into your lap. And so look at this. Here is 5 right here, 5 through the 8, okay? And it pulls back to the 21, and now you've got this beautiful consolidation. And that's my groove. Like, that is my setup. And by no means, these videos, as you know, stock nerds and market lovers, these videos are never advice, okay? These videos are for your edification purposes only, never ever to be misconstrued advice. What advice, any advice, seek advice, all you have to do is, in fact, give us a call, 855-732-5932, or dan@revereasset.com. That's the groove, right? And so, well, does the Nasdaq look like that right now? And so let's just zoom in here. Is a 4-hour chart. Not as pretty, right? It is a consolidation, but it's not as pretty, I think, as that Adobe chart. But let's just go back to the Nasdaq itself. And I know this is hindsight, but this will come in handy at some point in the near future. And hopefully you save this video and you'll be able to reference it. We'll get it. We won't use ATR here. Let's use moving averages that you used to. So here is when This is a daily chart. Here, let's see. Pull back to the 50. When is the last time you got a moving average cross where the 8 came through the 21 or the 5 came through the 8 and the 21? All the way back here in May. And what you've done is you've just held. You know, and here you've got the 5 coming through the 8 recently. Now, I mean, if you missed, but it's not, one of my point being here is it doesn't happen that right now in the Nasdaq. And so when you find those moments in time, you know, yeah, you've had a really good run, and you probably haven't had to overtrade too much. And so what's something you want to look for? Well, pull back to 21, probably a good place to evaluate what's the overall market doing. And then a moving average cross could be used as a trigger. And so, gosh, I wish I would have pulled. If you want the class I taught on 5-8 cross and triggers, and any other class that you think like average range, just email me, tim@revereasset.com, find me on Twitter, and it would be my pleasure to send these things to you, because the market has these levitating indices with this great rotation underneath. Now, I kind of think the transports have signaled something, kind of along with the TNX. Really though, hasn't come through. I mean, you're just in this vicious range right now in the S&Ps, and so until this level breaks, you're going to be in this vicious trading range, and that's what you have to understand. And so, and if you're looking at reflation trades, like I haven't looked at them, we're going to look at them live together here. So like Caterpillar was a big one, right? How about Deere? Let's look at XLM. Yeah, like the oils are like, okay, I've looked at one oil, CVX. Yeah, they're not bullish charts. So you know, it was reflation, and in late spring that broke. Transports were kind of, you know, TNX was telling you that, transports are telling you that, and it's been tech. And so, you know, if you're like, well, when would I get back into this reflation trade? You need interest rates, you need yields to move higher. You need this not to say 11.84. You need this to say something more, substantially more than that. And then you watch and you see, like, you know, STLD, what's steel doing? That's not so bad. STLD, the steel prices just won't come down here. Is it X? Yeah, US Steel. They just reported, not at highs. STLD might be a little bit better. Let's look at TAN. Not really inflation. Still not moving anywhere. Just looking at a different way to look at energy there. Yeah, I think that, you know, until we get out of this kind of holding pattern, this purgatory, you're just going to have this violent rotation constantly underneath. But if the ES follows through, I suspect that the Nasdaq won't be able to hold serve, and it would pull back. So something to look at as we head into jobs report on Friday. Look, I hope it helps. I hope the materials that I've offered you, if you so choose to request those, I hope they help you. And then I will see you at the next update.